Hey Forex Fortune Hunters, welcome aboard. Tom Wilmot. In this video, we're going to focus quickly on SuperGIMMA. It's the multiple moving average template we use in Metatrader to really collect those hundreds and hundreds of Forex Pips. This particular chart is the Euro USD. It's been on fire lately as the US grapples with its inflationary programs, its COVID-19 programs, as it continues to print money and reduce the value of its currency vis-a-vis other currencies around the world. So hold on to your hat. We're going to show you how to collect those pips right after this. Okay, Fortune Hunters, just a little background for those of you who are new to the video series we produce on Metatrader. This particular video is going to focus on one of the templates we created to trade with the trend, and we have written about it in our book, Forex Power Surge. And there'll be information about how to link to that down in the description of this video below. Another thing for newcomers is that all of our indicators and templates have been captured and copied. The files are available for you to download on Dropbox, and there's a link to send me an email down in the bottom of this video as well if you'd like to have that. If you're newer to trading in Metatrader, there's also our early book published in 2015, The Amazing Zeelander Flytrap Trading System for Forex, and that's also available on Kindle and has been available and working great for 5 years or more. So please help yourself. None of these are going to break the bank, and they may give you additional background. We try to cram as much into an 8 or 10 minute video as we can, but there's lots more available also on our website, fxfortunehunter.com. So without further ado, the indicators and templates we've been describing in a few of the previous videos that are available on our channel at YouTube/user/vineyardfx. If you just happened upon this, there are lots more than 100 videos there that help describe how we approach trading in Forex. And in this particular video, we're going to show you about the multiple moving averages that we use all the time. This is called SuperGIMMA because usually we simply have the 12, 16, 20, and 24 EMAs available, but we've added the long GIMMA to this, and this is giving you a picture that's very clearly showing where, when we drop down into the particular set of bands, we might have an excellent entry opportunity. This happens to be a 15-minute chart of the Euro and USD, as I said. We also add the stochastic and the MACD to it. You can see here very clearly that what we've had is an uptick and then a pullback with the orangey histogram lines, and then a continuation higher. One very conservative way to do this would be to get in after the MACD turns positive, but because these are lagging indicators, you're going to get into a situation where this in the London Open this morning probably was not available to you. This big candle here, let me open it up so you can see it more clearly. This candle here was unavailable to you because it had already taken place. Now you're still going to get the move here, which is good for 33 pips. Sorry, my glasses are fogged up here. But bottom line is, if you were to wait and see the pullback and the stochastic and maybe even get in as you're pulling back, that's perfectly legitimate as well. In this particular one, we don't have the other indicator, the RSI indicator. That would probably have pulled back into the 45-55 band for those of you who watched previous videos. Now, what's this arrow? This arrow here is our indicator that we came up with for the Zeelander book back in 2015. what happens here is that you get a white medallion when the 12 and 24 cross over, either to the downside red or to the upside white. And notice what happened here was we continued higher, and when the 12 EMA crosses over that line that's created by the closing value of that crossover candle, that's when you get a confirmation that the trade is on the way. Now, if you're not too far away, the stop loss would be below here. The stop loss would be below our line, our Zeelander signal line. But bottom line, you could either get in there if you can afford and are interested in that risk. So for example, here we had a pullback probably of 17 pips, or you could conceivably wait for the pullback down here, and then you could simply put, after you get the bit of a reversal, you begin to see this, you can put your stop loss down here below the low of this candle, or you could use the 24 EMA. All of those are possible. Now, in some of our other videos, we've also shown templates that have trend magic on it, and that trend magic is probably going to be at this level as well, but you can see how this pullback into the bands also gives you a pretty clear idea of how you want to continue your thinking about trades. Now, here's an even better example after the London Open, in between that and the 7 a.m. hour for the U.S. Open, and then the pullback here during the beginning of the stock market, the New York Stock Exchange entry. You can see here we had another pullback. We had a more confirmed view here of the pullback below the 25 on the stochastic. And by the way, this is a slow stochastic set to 4, 2, and 3, so it goes a little more quickly. And so here's the situation here with the long term, the signal line pulling back below the 25. Notice here we've had our orangey histogram bars. Now here was the indication with this pop-up that you're going to get some kind of relief at this 24 level. And you can see that's very clearly where this is. And we'll put our line here to show you. Let me see if I can find one here. Well, here it is right here. If your stop loss were to go into this section right here, let's make it a little bigger so you can see. If your stop loss were to go into this level right here below on the 24, you can see that you would not have to wait until all the way back to the signal line or even the big the SuperGIMMA kinds of EMAs here. This would be a perfectly adequate stop loss level. And if you were to get in here, that would be on a 15-minute chart even the 9 pip, 8 pip kind of stop loss versus a 27 pip return on your money. Now, certainly you're getting in a little late. You don't want to ever, in my opinion, get in after the second or third time that this pullback occurs, because your trend is very likely to be running out of steam. You can see here we had a double top before this pullback. But in any event, that's a situation that you could play either here with this one or here with this one. Now, let's get rid of this line and let me show you one more trick before we close this particular video. In the Zeelander book, we described a strategy that we still use to this day. And if you were to say here on the uptick, right after that, we put in our line here, our vertical line on the candle that just follows this confirmation of the uptick. Now, what you can do here is to drop down, and I have been using the 5 and the 1 actually over the last few days very successfully. The 5-minute pulls back, and you can see here is your pullback with your pull below the 25 on the stochastic, the same kind of entry-level opportunity coming here. This was the bar on the 5-minute chart, and if you want to get really crazy, you can even go to a 1-minute. Notice this is a very strong trend to the upside, so using a 1-minute chart here is not necessarily a bad idea, especially with the Euro USD, where your pip count for your spread is not going to be too awful. You wouldn't want to be trading, say, the pound New Zealand dollar, because that's a 5 pip kind of a spread. But here, if you've got a pip and a half or even 2 with the pound US or the US Japanese yen, 2 pips on a 1-minute chart isn't going to break the bank. And notice here what happened on the 1-minute chart. We had the same pullback on the stochastic. We had the downtrend on the histogram bars. We get into this area here, and notice even below the yellow caution line on the SuperGIMMA chart, we only have a 3-pip problem. And also down here, we only have 9 pips, even down to the Zeelander signal line. So that's another way that you can limit your risk without necessarily minimizing reward, because if it's going to go up, it's going to go up. And so you're trying to make sure your risk is limited while you're not constraining the upside move. And here was our first upside move, 21 pips. And that occurred in 25 minutes. So not a bad return on your investment for using the SuperGIMMA Metatrader template that we have documented for sure in our book, Forex Power Surge. So thanks for watching. As always, guys, subscribe to the channel if this is helpful to you. See about our other videos on Fidelity, ATP, and so forth if you're interested in trading equities or options, and see how you can use these same kinds of strategies and templates that are transformed into those platforms to make sure your accounts are going on the equity curve up and to the right. Have a great day. Thanks again for watching.